Let's have a look at this case study of Mr. and Mrs. Tan. Back then, they bought a 4-room BTO at Choa Chu Kang for $300,000. Because they have some available OA and grants, which they used to offset the purchase price, during key collection, the loan they took was about $230,000. So 5 years later, fast forward to today, they have fulfilled their MOP and are looking to upgrade. But they're not sure, is it actually easier, better? What's the differences for them to upgrade today or a few years later? Let's take a look at the facts and figures. Assuming today they're going to sell their HDB for an average price of $450,000. Right, so firstly, they have to repay their outstanding HDB loan. And like most Singaporeans, Mr. and Mrs. Tan services their monthly mortgage with CPF. So what happens is, because you have used CPF for a property, when you sell a property, whatever CPF that you have used, along with the accrued interest, must be refunded back to your CPF account. So for the sake of simplicity, in this case study, I have actually split the total CPF they have used into equal portions for both owners, as you can see over here. So today they sell at $450,000. After repaying HDB loan and refunding these two amounts back to their own respective CPF account, they are able to cash out approximately $96,000. Well, assuming that they decided not to sell today and wait another 3 years, on the 8-year mark, what is going to happen? Assuming they sell at the same price, you can see that the HDB loan has dropped because they are paying every month. But the CPF that they have used has actually increased quite a bit. So what happens is that after repaying HDB loan and refunding back your own CPF account, the amount of cash proceeds that they can cash out is only about $67,000. Right? If you look at this, the difference is about $30,000. Isn't that quite a lot? And assuming that they decided to wait even longer on the 10-year mark, right? After another 5 years, this is the 10-year mark. Assuming they sell at the same price, what's going to happen? Their cash proceeds after repaying HDB outstanding loan and refunding back their own account, they're only able to cash out $47,000. Can you imagine if you sell today, you cash out $96,000? If you wait 5 more years and you sell, you only cash out $47,000. That's almost half of it. Yes, of course, if you wait for another 5 more years, the amount of CPF that you get back is higher. But do you agree that holding cash is actually more important? Let me give you an example. Assuming today, Mr. and Mrs. Tan decided to upgrade to a 1 million condo, which requires a 5% of a cash down payment, which is $50,000. Assuming today, if they sell a property and they cash out $96,000, they are able to pay off this amount without touching any of their bank savings and still have a good amount of $46,000 remaining in their pocket. Now, which of this scenario do you think is better? So the next question you ask me is, hey Leon, but what if the HDB price go up or go down in the next few years? Let's take a look at the numbers. Right, so assuming the HDB price will appreciate 2% on a year-on-year basis, meaning that on a 6-year, the HDB price appreciate 2%, 7-year, another 2%, 8-year, another 2%. So bringing the selling price to about $477,000 on the 8-year mark. Right, so after repaying a HDB loan and refunding back into your own CPF account, you are able to cash out $95,000, which is not bad. But look at it, these two amounts are quite similar, right? Even after 3 years, your HDB has appreciated $27,000, but your cash proceeds are very similar. Why didn't it appreciate? I'll touch more on that later. Right, so let's look. After 5 years later, on the 10-year mark, the appreciation has brought your HDB to close to $500,000 at $496,000. So you can see that your HDB has actually appreciated by $46,000. But even after, at this price, you sell, you repay your HDB loan, you refund back your CPF, you are still getting back $94,000. It's very similar to what you have get back if you sell 5 years ago. Actually, it's a bit lesser by about $2,000, right? But the point here is that if 5 years ago, over here, if you had an opportunity, a chance to upgrade your property, does it make sense to actually wait 5 more years and do it here when there are no benefits at all? Right, even though HDB has appreciated $46,000, you look at the cash proceeds, it is still very similar. It doesn't give you more cash proceeds. There's not much benefits in waiting for 5 years. Over here, if you have upgraded, you would have enjoyed and saved these 5 years of your time. You could have enjoyed your new home. You could have enjoyed capital appreciation, $100,000, $200,000, $300,000, right? There's really not much sense in waiting for another 5 years if you're able to upgrade over here comfortably. Okay, so the reason why even though the HDB price has increased, but the cash proceeds doesn't go up much further is because of the accrued interest in your CPF that you have to pay back to yourself during the sale of the flat. Okay, so now what if the HDB price go down? Assuming that it's go down 2% year-on-year basis, okay, by the 8th year, your HDB price would have went down to $423,000. After paying back the HDB loan, after refunding back your CPF amount, you are left with $41,000, which is almost half of what you will get over here, which is a very big difference. Right? If we go down even further on the 10-year mark, the HDB price is now worth $400,000. Okay, you can see over here, it has depreciated about 44K, but the cash proceeds, if you're selling at this kind of price, you're only going to get back $4,000. Well, over here, 5 years before, if you decide to sell, you are going to get back $96,000. This is a 90K difference. Very, very big difference. Okay, so now that you have seen all the facts and figures about what happens if the HDB price remains stagnant, what if it goes up and go down. Now, what is the HDB trend for the next few years? Is your HDB price going to go up or go down? Let me share with you this. So this is the HDB resale price index. It is an indicative of how the HDB resale market is actually doing in the period of time. In 2013, we've seen the peak of the HDB prices. So the price index by then is at 149. Right? So you can see from the graph that HDB prices have been going down steadily. Only in 2020 and 2021, the price actually went up to 142, which is very, very close to the peak. Right? So what happens during this period of time? Because of the pandemic, BTO construction times have been delayed. Right? Can you imagine buying a home today and waiting for 6 years before you can move in? And if you want to sell, you have to wait for another 5 years. That will be a total of 11 years. Right? Which is why many of the home buyers are now looking into the resale HDB market. With an increase in demand, we can see a price increase as well, which is why we are witnessing the price increase over this period of time. Let me share with you some numbers. Right? So these are the transactions for a block in Choa Chu Kang 687D. You can see in 2013, during the peak price, right, a high floor unit, 22-24, is worth $522,000. Okay? Fast forward 2015, March, you can see the price has dropped to $436,000. Right? Even nearer, 1718, the price here is about $410,000. In 18 itself, December, it has dropped to $382,000. Right? So you can see clearly that HDB prices have been declining over here. Only in recent time, 2020, 2021, you can see over here, the recent transaction, 22-24, HDB price has went up to $490,000. You can see that it has went down to $380 over the years, and now it has went back up to $490,000, which is what we are witnessing over here. So the question I have to ask you is, if you have a chance to sell a HDB today to maximize the profits and upgrade comfortably, would you do it now? Or would you wait a few years later? Right, a few years later, the pandemic would have settled down and the BTO construction times would have normalized. By then, do you think HDB price is going to go up or go down?